this particular little process that you learned just in classroom in the oil quick start. But I want to make sure you understand what it's showing us in terms of slopes and in terms of narratives. And it shouldn't be taken in isolation. We always have a dollar reference in the background as well. We always have a calendar spread reference in the background as well. So we always make sure that we try and trade with the other things in line. The basic core concept of this is very, very straightforward. There should be a divergence to trade into. Now, what I mean by that is, if you just look at these two lines in isolation, number one, if I'm going to be buying oil, if I want to buy oil, of course, one of the key aspects is I want to see the red line at a premium to the blue line. Now, how you define that premium obviously is a challenge. We've chatted about that with Greg regarding how to define this idea of anchoring. But most people can see a divergence. Most people can see when it flips over because it should be clean, it should be sharp. I think everybody can see that the red line flipped the blue line just in this area here. So I know that that is going to be a sell on oil. We can all agree that the red line flipped the blue line here when the red line made higher highs and the blue line started to make lower highs and then lower lows. We can all agree that the red line flipped the blue line there as well. And obviously we can all agree that the red line seemed to flip, but it was a tough one to call, this flip down here, wasn't it? It was a tough one to call about when the red line flipped the blue line at the bottom edge. But there's other things we can use to help us. We can obviously use the oil price itself, but the other thing we can use is simply to use the slope of the lines, very much like we talked about when we talked about the DVO1s. Use the slope of the line to help you. Use the slope. Okay? Now, what do I mean by that? Well, if I'm going to sell oil in this environment, I want to see the red line starting to rise. I want it discounted against the blue line, but I want to see it starting to rise against this overall shape. If I want to try and do it again here, I want to see the red line starting to rise. Now, as I said, there was challenges here in the short term because of what happened in the blue, but I can also start to recognize where the opportunity is. I can start looking in that area and I can say, right, I am going to try and spot any higher highs during this period, so long as the red line is discounted to the blue line as far as my value narrative is concerned. So when I look at this as a trade idea, when I'm looking at this red line making higher lows, I am now looking, for example, at that huge volume there, and I'm saying to myself, there's the sell. That's the one I want to take advantage of. Do you see the massive volume there in a rising blue and a rising red environment? Do you see what I'm seeing? Do you see how that rising red environment with the discount against the blue makes it so crystal clear to get that short trade on my books? It's just like screams at me, sell, sell side only. And it's a level 2, which is why we got the big volumes. And that trade went from 90s down to a low price of 30s. It was worth $600 eventually. Great trade. Now, into this phase here, you can see what happened here. Do you see what happened here? The red line is discounted against the blue. I think we can all pretty much agree that that's the case. The red line is into new fresh lows. The blue line is massively divergent on a macro scale basis. And the red line is now starting to slope up. So based on the red line starting to slope up, I'm looking at each of these peaks or troughs, and I am drawing a line. So when I get that trough there, I draw a line. When I get this trough here, and it turns around, I draw a line. In other words, what I'm doing now is I'm trying to sell above these red lines on an offer. I'm trying to work offers into these areas. So I'm able to work an offer into that area there. I'm able to work an offer into that area up at the top edges. I'm able to run the stops here, and sure enough, as if by magic, we get this enormous sell-off for $750 short sell opportunity right there. Now into the low price, you can see that the red line's now completely flipped over from the blue line, and a lot of people say, yeah, but when do I start buying it? When the red line starts falling. Yes? You're starting to see why this is important. So when the red line starts falling against that ledge there, what I'm now going to be looking at is where's my lowest low during that period. What I'm going to be starting to look for now is opportunities if this line is dropping, opportunities to bid into this. Now, we've already had a buy trade that came from 85.05s to 85.20s. It's already been worth $150. So obviously that's what we're seeing. Now, the red line's now made a punch to the upside here, and obviously we're very, very mindful of the fact that it has made a significant punch to the upside, and we're also aware of the 85 handle at the bottom edge. So if you're bidding, you would obviously be bidding below the 85s for your second opportunity. And obviously you've bid just below 85s for your second opportunity. It's already traded 85.10s, another 10 ticks, another stop at break even on your Royal trading off the bottom edges. Now, as I said, in isolation, this makes money. In isolation, this makes money. But if you add it to the dollar, you can start to ask a more intelligent question. Should I be buying or selling at any stage? Well, take a look at this pattern here and you tell me what we should really be doing in terms of oil today. Ever since 9 o'clock this morning, what should we really be doing on oil? Buying it or selling it? We should be selling it, right? We should be trying to be short oil. In other words, we already know that if the oil's making these opportunities to bid into the lows, we know that there is a massive challenge to that. Because we really should be significantly lower, right? This is what we keep talking about. You can't just become a one-trick pony. We know that the better opportunities are, instead of buying these for scalps, is to try and sell the scalps and hold on for grim death. Hold on for grim death. If you're going to buy it for profit taking, right? If you're going to buy it for profit taking. But hold on to the sell side as much as you can, and what you're left with is what we did over here. Do you see how it's all sells? It's all sells until we started to see a reasonable dollar sell, in which case we then managed to buy a real big discount price. And then we immediately got back into selling as much as we possibly could. And sure enough, that sell as much as we possibly could, coming into, surprisingly enough, 1400 hours. Remember the systems trade? Your only systems trade would have been to getting sell side, wouldn't it? So your systems trade just made you a fortune. Your systems trade just made you over $1,000 for anybody that did the systems trade. So there's your red candle there. You know the only trade you should be in is a sell side trade at the systems trade narrative. And you've had a red candle there and a red candle there. 2 red candles, 3 red candles, all at the same price area. And you've just had $1,000 paid into your account. If you did the systems trade, which is the real basic, you know, a 10-year-old could do the systems trade. So you've got to try and beat the systems trade prices, correct? Did we teach you this yesterday? So where's the system sell? Well, the system sell was there. So you've got to try and beat that system sell price. So based on the system sell, your job was to beat that system sell price. Well, that wasn't really difficult, was it? Pretty much every price was beating the system's sell price. So you should have been working into the sell trades on these upticks into these phase areas here, and obviously the takeaway from that has been $1,000 profit for you from the NYMEX market open. Really not that difficult, is it? No, really not that difficult, Sebastian. But again, that's only if you implement what we teach. Only if you implement what we teach. And what we teach was, yesterday we showed you how to do the systems trades, how to recognize what the systems trades are in any RGL area. NYMEX is an RGL area. That becomes a systems trade. Straightforward, $1,000 paid into your bank account. RGL comes in, a volume RGL comes in just there. So you obviously want to book that money and finish off your day with an $1,100 profit right there.